Welcome back, new YouTube video, and this is the fourth video of my 4-video course where I teach you my strategy from A till Z. Alright, before we begin, I want to ask you if you want to subscribe to my channel, leave a like, and if you have any question about my strategy whatsoever, put it in the comment section. I'm happy to go over all of your questions. Alright, so in today's video, we're going over everything that we have learned in the previous videos and going to combine it into the real chart. Alright, let's talk no more and jump into the chart. Alright, so we are back on the charts and this is where the fun stuff will begin. And I have drawn an entry model that I use. I use a few entry models on my strategy, but this is definitely one that I'm using loads and will help tremendously. So what we want to see, look, I'm always entering after a sweep of liquidity. So for example, I have drawn out a support area. We can assume that this is the Asian range, for example, and price sweeps that support, breaks a little bit up, leaves a 1-minute supply or 5-minute supply, 2-minute supply, 3-minute supply. I look on different time frames to find something clean. Then I want price to retrace into that area. I want price from that area doing a bearish break of structure on the 1 minute. As you can see, I have also drawn a trend line. So what do I want to see? I want to see liquidity taken even on the lower time frame to confirm for me if this entry is legit. The moment we break up above this high in this supply is the entry for me, and this is how I overall mainly have almost no drawdown, only if the price just wants to go lower, which happens, obviously then we will be stopped out or there's a little of drawdown. What can happen is that price wants to come back to this area and then move towards the upside. All right, so entry model given. I hope you guys like it because this will help you heaps in finding solid entries. Now, what I want to do is I want to go over a few of these trades because all of my trades have similarities. Why? Because I trade one strategy. Why? Because I use liquidity. So all of these trades have similarities, and that's how it's supposed to be. If all my trades are complete different setups, well, obviously I would be trading different strategies, but I trade one single strategy that makes me consistent money from the market. All right, so jumping in the first one. And what we clearly can see from this area, because this is a London trade, if we have price action and we have overall bullish range, internal price action stepping down. I knew that this was the low and over there is the high. So I know overall price action is still bullish. Well, what happens then? We have a low, we come up, and around the area of Asia, we create this area of support. And this is what I want to target, right? So what happens? We have a low, we have a high, price comes into this area. There's even a lower time frame demand area where price is reacting from. From that area, we do a bullish break of structure. Well, you can imagine that if we have a support, if we have a demand, and we have a bullish break of structure, that loads and loads of buyers will enter the market. And this is where I simply want to short. And that's what I did, right? Easy trade, easy going. Entry model is used like this, but then the reverse, right? So it's in the opposite direction. The same goes over here. So now this day had played out. We have taken out that support area, but what happened? Internal price action started to go bearish because we had taken out that support area over here. Support area swept with this wick, created a bearish range, and what does it leave? It leaves an area of resistance. Before London opens, what do we have? An area of support. All I want to see is a sweep of that support, my 1-minute entry confirmations, and I can go against the herd. I can go against the sellers because there was a trend line. There's even higher time frame trend line over there. There is a supply. So many sellers want to get in and want to take that short position. And this is where I want to buy into their liquidity, into their stops. Then we have an interesting one because what happens over here? Price comes all the way up, then breaks all the way down. And this is where things get a bit interesting because internal price action over here is what? Stepping up, bullish. Having a low, which had taken out liquidity, coming up, come down, and then comes up into this area. This again is London open. All my entries are around the same timing, and that is specific because there is coming volume, liquidity, and money into the market in which we can use. Banks manipulate the market pre-London. This is why we see a bullish break of structure over here. This is inducing heaps of buyers from these areas. But what did we already knew? We knew that there was a support area. We knew that buyers were induced. So what happens if we take out this liquidity area, which is a resistance? We fake people in from this little supply. We take that out and then we jump back down and take all that liquidity. Now I'm on the hourly time frame. I cannot play back and go into the 1 minute so far ago, but there were 1 minute entry confirmations and there were even more traps built on the lower time frame, which is perfect and what we love to see. Right, what happens then? Well, new structure is formed. We even have ourselves pretty clean as support over here. Let me draw that out. Over here we have clean as support. But what happens? We see price pushing down, coming up into what? Area of almost area of supply over here, this whole push. Then what happens? Internal break of structure, bearish, comes up into top supply. What does it leave? It leaves a support area. From this supply, we do another bearish push. In other words, we break another bearish market structure. Now imagine the amount of sellers that are coming in from the trend line, coming in from the resistance, coming in from the supply zones with all the internal bearish break of structures. Well, we know overall market was trending up. We know that if we see on London Open an inducement towards the downside, that we probably can look for longs for the session. Well, what happens? We can clearly see price comes in. There is a nice little SMC trap, supply trap over here. Price reacts from it, breaks bearish over here. It's not very visible, but this wick comes in, then breaks bearish over here. This is a 1 minute bearish break of structure to induce what? To let people think the market will sell off. Well, obviously what happened? The market rocketed off and took out all those sellers that were entering from these areas. Then again, we had a few days without trades. We can already spot where I missed an entry, right? Over here. Price comes in, area of interest, breaks bullish. There was a resistance, takes that out, and what happens? Takes out this support eventually. So these setups occur twice, 3 times a week on average. There are some weeks that there are just no trades. It happens, it is what it is. But let's see what this trade will give us, because price comes into extreme demand. In Asia, we tap into that extreme demand. Then what happens? We push up and we break internal market structure bullish. But not only we do a break of internal market structure, we also take out what? Resistance. 1 minute entry confirmations were over here and the market sold off into that demand area where everyone was buying from. The most obvious points are liquidity. So I've shown you multiple entries, multiple trades. All these trades are verified in my Discord. You have to scroll a bit up into the free alert section, but you can see all trades are taken over there and shared. And in the other videos, we went over some other trades as well, where I completely showed you how my entries look like and how you can find these setups yourself. All right, this was it for today. Yeah, see you inside my Discord. Cheers.